Bitcoin, through increased knowledge and successful partnerships, continues to advance the most secure banking network globally. Bitcoin steadily continues to infiltrate the mainstream with strong leadership and curiosity worldwide. This shift is driven by a growing recognition of Bitcoin's potential as a store of value and a hedge against inflation. No longer just the domain of tech enthusiasts and libertarian idealists, Bitcoin is attracting the attention of institutions. States and corporations see the value proposition of this digital asset. This video will explore the rise of Bitcoin as a strategic reserve asset, examining the drivers, implications, and potential risks of this financial revolution. The increasing adoption of Bitcoin by institutional players is a testament to its growing legitimacy. While the global public of individuals were the early adopters, the entry of institutions marks an important turning point. This shift is not merely a speculative frenzy, but rather a calculated move. Every paycheck we receive is essentially printing new money, adding to the overall global money supply, also referred to as M2 money supply. A broad measure of the money supply in an economy, including currency, checking and savings deposits, and money market funds, and when it increases, meaning more money is added to the system, it can potentially lead to inflation by putting more spending power in people's hands, which can drive prices up, especially if the economy isn't producing goods and services at a matching pace. Essentially, too much money chasing too few goods can cause inflation to rise, impacting the value of the US dollar as it buys less with each unit of currency. When the Federal Reserve increases the money supply by expanding M2, it can lead to inflation if the increased money is not matched by a corresponding increase in goods and services produced. It's essentially a tax on the consumer, eroding value from their paychecks as the dollar is devalued. With more money available, people and businesses tend to spend more, causing higher aggregate demand AD, leading to an increase in price level, driving up demand for goods and services, which push prices higher. Bitcoin's structural nature, created within its fixed supply, acts as a fiat compressor, providing an immense growth potential against inflation, allowing it to become not just an attractive asset class, but what many like to call perfect money. With inflation rising faster than the S&P 500 benchmark, roughly 10 to 15% per annum, state pensions and other government funds must act quickly to outpace this compounding devaluation of the dollar. Bitcoin continues to maintain the highest return of investment over time. The state of Oklahoma has taken a bold step by introducing the Strategic Bitcoin Reserve Act. This legislation, if passed, would allow Oklahoma to hold Bitcoin as part of its state treasury. Similarly, Texas State Senator Charles Schwertner announced, "It's time for Texas to lead the way in establishing a strategic Bitcoin reserve," the Republican politician and physician said while announcing the Senate bill, SB 778, allowing use of revenue surplus to purchase Bitcoin for the Lone Star State, held in its state treasury. These initiatives, though in their early stages, are indicative of a broader trend. Furthermore, Pennsylvania Representative Mike Cabell recently announced legislation for development of the Pennsylvania Bitcoin Strategic Reserve, aiming to diversify the state's financial holdings by allocating up to 10% of its treasury reserves into Bitcoin. These state-level initiatives are particularly noteworthy because they signal a shift in the perception of Bitcoin from a speculative asset to a legitimate store of value. By incorporating Bitcoin into their financial strategies, states like Oklahoma and Texas are sending a clear message. They are acknowledging the potential of Bitcoin to act as a hedge against inflation and economic uncertainty. This move could potentially pave the way for other states, even foreign governments, our sovereign allies, to follow suit. The corporate world is not far behind in recognizing the transformative potential of Bitcoin. MicroStrategy, a leading business intelligence firm, made headlines by adopting Bitcoin as its primary treasury reserve asset. This bold move, spearheaded by CEO Michael Saylor, signaled a shift in corporate treasury management. MicroStrategy's decision to convert a significant portion of its cash reserves into Bitcoin was a watershed moment for corporate adoption. This strategic move, driven by sailors' conviction in Bitcoin's long-term value proposition, sent ripples throughout the business world. It challenged conventional treasury management practices and encouraged other companies to consider Bitcoin as a viable treasury asset. One of the key factors driving Bitcoin's value proposition is its fixed supply. This link between the money supply and inflation can be seen in many historical cases. German hyperinflation, 1923. In the aftermath of the First World War, Germany faced high reparation payments. To meet these demands, the government started printing more fiat money so that firms could continue to pay workers. This led to an explosion in the inflation rate. By the end of 1923, printing money had got out of hand, and the economy experienced hyperinflation. The United States also faces high government debt, a risk of falling output, and a need to print money to stave off a short-term debt crisis. This printing of fiat money will almost always lead to hyperinflation. Unlike fiat currencies, which can be printed endlessly, only 21 million bitcoins will ever exist. So instead, if the government were to print fiat money to directly invest in Bitcoin first before continually spending, the Bitcoin fund over time will offset rising costs and expenses, i.e. inflation. Due to its scarcity, coupled with increasing demand, creates a compelling case for long-term price appreciation. The fixed supply of Bitcoin is a fundamental aspect of its appeal. It prevents dilutive practices against the US dollar and businesses. This inherent scarcity is in stark contrast to fiat currencies, which are subject to inflationary pressures, in other words, dilution, due to their unlimited supply. As more individuals and institutions recognize the value of a scarce digital asset, the demand for Bitcoin continues to rise. This dynamic creates a natural upward pressure on its price, making it an attractive investment for those seeking long-term value preservation. Think of Bitcoin as an air compressor for fiat money. Bitcoin's fixed supply design operates much like an air compressor in the global fiat system, a metaphor that captures its role as a pressure mechanism on value. As more fiat currency enters circulation, a result of monetary expansion, Bitcoin's finite nature compresses the relative value of that fiat within its chamber, creating a natural upward force on Bitcoin's price. This phenomenon makes Bitcoin an increasingly attractive investment for long-term value preservation. Bitcoin's fixed supply as a value compressor. In this analogy, setting the stage for a situation with continuous high volume and compounding lower float. As more Bitcoin is purchased by long-term holders, a decreased number of Bitcoin will be available for sale. This deflationary scenario increases buying pressure almost autonomously from its static low float rate. As the amount of Bitcoin consumed from buyers removing it from circulation on the market and simultaneously increasing value velocity significantly, creating a concentrated high-pressure value jet due to the principle of fluid dynamics, essentially focusing the force of the fiat air into a smaller, low-float area, allowing for precise value creation applications with a powerful blast. Bitcoin's fixed supply design operates much like an air compressor in the global fiat system, a metaphor that captures its role as a pressure mechanism on value. As more fiat currency enters circulation, a result of monetary expansion, Bitcoin's finite, low-float nature compresses the relative value of that fiat within its chamber, creating a natural upward force on Bitcoin's price. This phenomenon makes Bitcoin an increasingly attractive investment for long-term value preservation. Section 5. Lost Coins. A digital treasure buried deep. The story of Bitcoin inventor Satoshi Nakamoto is one of the most fascinating mysteries of the last few decades. Even though Satoshi invented a technology that has had a big impact on the world and mined billions of dollars worth of Bitcoin, he has stayed completely anonymous and has left his riches untouched. The most famous Satoshi Nakamoto wallet address, the address Satoshi used to receive the 50 BTC reward from mining the first block, also known as the Genesis block, on the Bitcoin blockchain. Satoshi has a huge number of different wallet addresses, more than 20,000 by some estimates. Most of Satoshi's wallets contained 50 BTC, as that was the Bitcoin block reward before the first Bitcoin halving. Estimates place the size of Satoshi Nakamoto's holdings at 1.1 million BTC. The vast majority of Satoshi Nakamoto's have remained dormant since, completely removed from circulation. Adding to the supply squeeze is the phenomenon of lost bitcoins. It is estimated that millions of bitcoins are lost forever, trapped in inaccessible digital wallets. Supply impact. Immobility of these coins effectively reduces Bitcoin's circulating supply, reducing its outstanding float, the coins available to be purchased. Long-term holders combine with other sources of permanent loss to reduce the amount of Bitcoin ever to be purchased or sold. Lost coins can occur through lost private keys, hardware failures, intentional destruction or coin burning, death of wallet holders without proper succession planning, technical mistakes, or sending to invalid addresses. It is estimated that millions of bitcoins are lost forever, trapped in inaccessible digital wallets. These lost coins effectively reduce the circulating supply, further amplifying the scarcity factor. The decentralized nature of Bitcoin, while one of its strengths, also contributes to the issue of lost coins. Without a central authority to recover lost or forgotten passwords, these bitcoins are essentially gone forever. Every lost bitcoin reduces the circulating supply, making the remaining coins even more valuable. This highlights the importance of secure storage and responsible ownership in the Bitcoin ecosystem. Section 6. The whales that hold the market. Long-term Bitcoin holders, often referred to as whales, play a significant role in the market dynamics. These entities holding large amounts of Bitcoin often resist selling, further constricting the available supply. The actions of Bitcoin whales have a significant impact on market price movements. Their decision to hold or sell can send ripples through the market, influencing the sentiment of other investors. The fact that many whales are choosing to hold their Bitcoin for the long term indicates a belief in its future potential. This HODL mentality, as it is known in the crypto community, further contributes to the limited supply available for trading. Capitalizing on Bitcoin's true supply. While Bitcoin's fixed supply of 21 million coins is often cited as one of its defining characteristics, the reality is that the true effective supply is significantly lower due to lost keys, while whales continue holding on for dear life. This dynamic creates additional upward price pressure, reinforcing Bitcoin's position as a long-term hedge against inflation and a digital store of value. For investors and businesses alike, understanding the impact of acquiring and holding Bitcoin as part of a resilient financial strategy. As President Donald Trump repeated shouts, "Never sell your Bitcoin." Section 7 Gamavana, the squeeze that could reshape the market. The confluence of institutional buying, lost coins, and long-term holder accumulation sets the stage for a potential Gamavana squeeze. This phenomenon, driven by options trading dynamics, could lead to a rapid and significant surge in Bitcoin's price. A Gamavana squeeze occurs when the price of an asset, in this case Bitcoin ETFs and companies like MicroStrategy, rises rapidly. This triggers a chain reaction in the options market, forcing market makers to buy more Bitcoin or MicroStrategy shares to hedge their positions. This buying pressure, such as Bitcoin ETF purchases, forces brokerages to buy more Bitcoin, further fueling the price increase, creating a self-reinforcing cycle. This scenario, while not guaranteed, highlights the potential for extreme supply shock in the Bitcoin market, causing an explosive upward pressure. Section 8. Bitcoin, the global reserve asset of the future. As more institutions recognize Bitcoin's value proposition, it is not inconceivable to imagine a future where it becomes a globally recognized reserve asset. Central banks, seeking to diversify their holdings beyond gold and fiat currencies, may turn to Bitcoin as a hedge against systemic risk. The emergence of Bitcoin as a potential global reserve asset has profound implications for the international monetary system Its decentralized nature, borderless transactions, and resistance to censorship make it an attractive alternative to traditional reserve assets. While the path to becoming a widely accepted reserve asset is long and complex, the increasing institutional interest suggests that Bitcoin is a force to be reckoned with in the evolving landscape of global finance. Section 9. Navigating the Bitcoin Revolution. Adapting to a new financial paradigm. The Bitcoin revolution is upon us. As this digital asset gains further acceptance, businesses and individuals alike must adapt to this new financial paradigm. Understanding the fundamentals of Bitcoin, its potential risks and rewards, is crucial for navigating this rapidly evolving landscape. The rise of Bitcoin presents both opportunities and challenges. Businesses that embrace this new technology stand to benefit from its efficiency, transparency, and global reach. However, it is essential to approach this new asset class with a balanced perspective. Understanding the regulatory landscape, managing volatility, and ensuring secure storage are crucial considerations for anyone venturing into the world of Bitcoin. The key is to stay informed, adapt to change, and embrace the transformative potential